What is going on, everybody? It is August 27th, Tuesday. Chris, I was actually thinking about you. I told Gary before we got on the live, I just had like a 45-minute call on educating myself on what cost basis is, which I assume you are well-versed in. I thought I knew what it was, but then I just had a good deep dive on like how it's going to apply to everything in our world. So I thought that was actually pretty badass. Anytime I learned something new that I thought I already knew, but I'm like, oh, I know nothing at all, I always actually get kind of excited. So I thought that was pretty cool.
Hey man, it's all it's what keeps us young, right? Always out there learning. I'm a firm believer that if you're not continuing to learn, if you think you know it all, you're already falling behind. You're going to get old quick. Life is too short to act that way. So,
Absolutely. Well, the title of today's show, Dow new all-time high, right? Chris, you seem to think the next 6 to 12 months there's going to be a stock. I put stock bull run. I know you just said raising prices, right? But all the dollar's weakening. So where do you want to start? I mean, do you want to talk about why you think the Dow had a new all-time high and where that came from?
yeah. So everybody freaked out. Of course, the whole yen carry thing. As normally goes on social media, everybody becomes experts within 48 hours of something new they've never heard about happening. And so, it was all about the yen carry trade unwind, which just so happened to come, right after we had that little uptick in unemployment numbers the Friday before. And so we had that strong drop on that, overnight Sunday into Monday kind of thing. But that was the end of a downtrend that had started back in mid-July. So, that was giving us, about almost 4 weeks of downside. And instead of continuing lower, of course, we got the bounce on Monday, the really good bounce. And just continued to follow through with it. And so while everybody continued to be afraid of that going on, of course, I was on here with you guys and I told you what I thought was going to happen, which is what we're seeing. But it just kind of continued to rally up there, which, the VIX shot up to that 65, 66 level. And it pretty much immediately has dropped back down. We're still sitting back there around 15, 16 on the VIX now. So, it was just like a knee-jerk kind of thing that happened there that finished off the downside move from mid-July. And so now we've got the Dow itself, the index, hitting a new all-time high. Dow futures are just shy of it right now, but the index itself has just hit a new all-time high, erasing all of the losses, not just on that Monday, August 5th, but the entire down thing that we'd had there from mid-July. So we got that. But what's important about all this is, you've heard about it a lot over the last, couple of years of how tech's been driving everything, right? The Magnificent Seven's been driving the move, and everybody's been concerned about it because it's, it's a very small, group of stocks that were moving the whole market higher and higher and higher. Well,
Magnificent Seven, that's like Apple, Microsoft, Amazon.
Yeah, exactly. And so what we've actually gotten off this August 5th low now is we've gotten this much greater breadth, which is why the Dow itself has hit the new all-time high, and the S&P not yet, NASDAQ languishing a bit behind both of them because, the NASDAQ is very, very tech heavy. It's almost completely tech. S&P is pretty tech heavy as well, but it's got a little bit more diversification in there. And then the Dow, of course, is much more broad-based index. So what we saw is we're seeing a lot of participation from a lot of different sectors. And as a matter of fact, what we've seen is something we call a breadth surge. So market breadth is surging. And what that usually indicates is a very significant number of your overall stocks, not just in one sector, but overall are advancing versus declining. And that's a pretty strong thing because when the market's going up, you want to have market breadth. You want to see everybody participating. That's healthy, right? That it's if all your sectors are kind of getting involved for the most part, it generally says that people are feeling pretty good about it. They're not too worried about things, and so they're putting their money into these different sectors in the market. Now, technology has pulled back a little bit. It's pulling back a little bit, but overall, breadth and stocks has just continued to rally. And that's a pretty strong performance indicator. Usually, when that happens, it signals that, stocks are going to be pretty good for a few months on out. So, you're probably looking at maybe 6 to 12 months. I would be thinking is probably a good timeline of which we can expect stocks overall to be bullish.
So I just Googled breadth surge. And so that's a ratio that tracks the sums of number of advancing stocks relative to those declining over a 10-day period. Is that correct?
Well, that's that particular company. That's what they use. But yeah, basically the idea is that you have a significant number, usually maybe about 80% or so, advancing versus declining, across market breadth, not just, again, in one sector. And that's the important thing, right? It's many more stocks advancing than declining across multiple sectors. That's the kicker. And so, yeah, that's what we're getting here. And so things, I think things continue to look pretty good. Now, that said, seasonality, September is usually kind of a doldrums time for stocks and whatnot. And we've had this big move continuing off the beginning of the month of, beginning of August. So I could definitely see that we're probably getting to a local top here. We'll probably pull back over the next few weeks, pretty soon here. But overall, it seems like things should continue higher.
Yeah, I'm looking at some of the market analysis now. Oh, so what is your guess for why the market's doing so well right now? I mean, if you had to summarize it in one or two sentences.
I think people are more worried about the way, again, the whole idea of a recession and, the inverted yield curve and the rate cuts coming, without understanding that the underlying cause of those things is more important than the fact that they happen. So people are worried about that. But, generally speaking, those that have the money, are putting it into the market. And so, there's nothing happening with these economic indicators that we're looking at that's like screams recession or anything at the time.
Yeah, I just read everyone's going to be waiting for NVIDIA's earnings report this evening, which I think comes out this evening, right? And so that's going to be a big signal. I guess if they don't do well, is that green going to go red?
Well, again, remember, we've been in a strong uptrend since August 5th, right? We have been up, 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 up. So, the idea that NVIDIA's earnings are going to determine the overall trend, again, that goes against, the way that I understand markets and, social mood and the way in which things move. But, it could indicate, a pullback, right? But that's what I was just talking about. We've been going up, 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 up for weeks now. We haven't barely taken a breath. There's been no real pullbacks along the way. It has been a strong move off that August 5th low. And so, we're coming about that time where we're likely to see a pullback.
And it's interesting because 6 to 12 months of stock price increases. Why do you think it'll be that time frame? Is it just because when you're looking at your structures on the chart, that's what it's showing?
Well, so, as I say, I'm usually not very good at timing markets. So I usually don't try to time them, as far as, this is going to happen this amount of time. But, when we're looking at where we're at and we're looking at that first rate cut coming in, we've got the election coming up, and the way that the market is setting itself up at the moment, I believe it sets out at least a good 6 months, potentially 12 months. It doesn't mean it can't do more, but, just erring on the side of caution and looking at more the shorter term versus the longer term look on that. I think the setup's there for a good 6 to 12 months.
How is that connected to the dollar weakening?
So the dollar's been going sideways, more or less since about January of 2023. So we're over a year and a half of basically sideways. You have a little deviation to the top, a little deviation to the low, but really it's just gone sideways. Now, what we've got is we've got the dollar now really starting, the DXY starting to break down. And so we should be, at some point here, breaking out of that consolidation to the downside. Weakening dollar means, basically it costs more dollars to buy your assets. So, if your dollar's going down, your assets are going to go up in value, right? Because it's going to cost more dollars to generally pay for them. And there's other things that go in there. It's not like, oh my God, the DXY drops down and immediately prices go up or whatever. But all things held equal, if the value of your dollar is going down, it's going to cost more of those dollars to buy those things. So whether it's stocks, gold, silver, Bitcoin, whatever. And then we've got global liquidity, which continues to increase week after week now. It hasn't surged at the moment, but it is increasing. And so when we have global liquidity coming in, again, I've made this point out before, the U.S. stock market is where people around the world want to put their money. They just believe in the safety of that. They believe in the safety of U.S. treasuries, And so when we look at them, we go, okay, well, global liquidity is increasing. That's China, that's the U.S., that's Japan, that's everybody. We should expect to see increased inflows into our markets here in the U.S., again, being stocks and whatnot coming in. So there's just a lot of things coming up here that we would normally look at that would say, okay, this is a plus for price. This is a plus for price. This is a plus for price. It's all kind of happening around the same time, which makes it really hard, especially because we haven't actually hit any definition of a recession that we use. It makes it really hard to be bearish. Now, that doesn't mean things can change at some point, but if we're in the market to make money, then we need to be paying attention to things that make the most sense. I see people sometimes talking about, oh well, I'm just early. They're saying this, right? But the problem is, if you're in the markets, being early is the same thing as being wrong. So a good example of that was Burry when he was coming into 2008, into the great financial crisis. For 2 years, he was trying to short everything, right, and kept it going. And his investors were going to sue him, trying to sue him to get their money out and to get him to stop doing all this. Eventually, it turned out right, but for 2 years, he was on the wrong side of the bet. And so, again, around social media, people tend to toss that around pretty simply, like, oh my gosh, well, I'm just early. But at the end of the day, if you're in the markets to make money, you've got to understand when early is just, it's too early, right? If you're going to be in the wrong side of the market while it continues to go up, 50% or whatever, it's just awful.
I had a quick question because you discussed assets going up. It's funny when we were talking about that, about, hey, what do I name the title of the show? I'm like, oh, assets increasing, almost like it was a good thing. But this is not the type of asset appreciation you want to see, correct? If the dollar's weakening, everyone's losing purchasing power. So your home value might be going up, but that's not actually a positive, right? Because relative to that home value, everything else is cheaper, I think would be the correct term.
Well, generally speaking, I mean, asset prices in general rise because of, global liquidity increasing, which basically means printing more fiat. We can argue all the time about how, something's worth more because of X, Y, or Z. But at the end of the day, generally speaking, it goes up in value because they print more fiat. And that's why we invest in things like gold or in things like Bitcoin, because we know that, we're a debt-based economy, and debt-based economies require inflation. Now, we don't want runaway crazy inflation like we had there coming out of the pandemic, but you do need, some continued increase or continued inflation, because the idea of debt is that you borrow today and pay back with cheaper dollars tomorrow. And so, everybody says, okay, well, we need, deflation, we need austerity, we need all that. And from a responsibility standpoint, that makes sense. But if you're in a debt-based economy, what that actually does is that hurts the economy, because you need that increase in the dollars coming in. You need that continual credit expansion going on in order to keep the whole thing going. Now, can you keep that going forever? I don't necessarily believe that. But, the U.S.'s unique position, having the U.S. dollar as the global reserve currency, which, by the way, I don't think is going to change anytime soon, guys. A lot of people talk about BRICS and whatever. I don't believe that's going to be anything big we have to worry about anytime soon. But because of that position, because of the how advanced our military is, the fact we got boots on the ground in every recognized country in the world, these things will continue to support the U.S. dollar as that reserve currency. And again, it ends up making our markets over here in the U.S. very, very desirable to others in other countries because of that ability to defend ourselves and to do all this stuff and global reserve currency and all those kind of, buzzwords and things that come out there.
So I just want to be clear, though, when you say asset prices are going to go up, is this slightly different than you telling me, hey, Sam, inflation is going to be worse, or hey, they're going to be printing money, right? Because all of those sound like they could increase asset prices, but that does not necessarily mean when Chris Inc. says, hey, asset prices are going to increase, you're not saying inflation is going to get worse or that they're necessarily going to be printing money, right? Like there could be multiple factors. And if that is the case, which ones are you looking at? Is it just the money printing?
Well, no, not just, but it is a big part of it. As people are really starting to find out here, those that hang around the crypto circle, crypto Twitter, all that kind of stuff, they're finding out that, hey, over the last maybe year and a half, there's been a lot more talk about global liquidity. I think Raul Paul was probably the one that kind of really got it into people's heads because he's got such a large following. But what we found, in looking back, is that at least over the last, let me see, what is this, 2024 now? So probably the last 30 years or so, we've really noticed a strong, link between global liquidity, because global liquidity's really kind of picked up over that time. And then, in the increase in asset prices. So it's not the only thing you want to watch, but it's definitely something you want to watch. If you want to say, okay, are the markets generally speaking going to rise in value, and you do see that global liquidity is increasing, then your simple, quick takeaway should be that yes, they should overall increase in value. Now, some participants, some stocks, some crypto, whatever, are going to rise at different rates. But in general, it should, all of them should kind of, for the most part, rise as that global liquidity continues to come in.
What would it take for a deflationary event? Is that even possible? I mean, I see on crypto Twitter, I even seen some of our comments here, people talking about a deflationary event happening. I mean, so are you going counter to that narrative? What does that even look like?
Okay, so yes, deflationary is definitely possible. You have to worry about disinflation first, disinflation just prior to deflation, right? So, if you have inflation, it's positive numbers, right? It's going up. Disinflation gets you where you're getting back around zero, deflation being negative numbers. And so when we look at that, when you have a recession coming in, that's usually, in line with deflation, right? So less money going out there, less things being spent, less things being produced, less things being bought, people being laid off because less things being produced. This all tends to have a deflationary effect, right? GDP contracts, or disinflationary at least. And so, do we have something like that coming? Sure. When this bull market that we're in now ends, whether it be next month or next year or 5 years from now, we should expect at least a disinflationary event, if not deflationary. Now, here's the crazy thing. If you watch, I've said this before, 2010 to 2020, the Fed was trying to keep the 2% inflation, right? They barely reached it like a couple of times along the way. As a matter of fact, we hit 2015 or 16, and then again around in 2019, we had deflation and disinflation for a short period of time. They just couldn't keep that inflation rate going. And then, of course, we hit the pandemic, supply chain cuts, all this kind of stuff coming in, people being forced to sit at home, money being printed out and given to them so they could all buy on Amazon and do all these things, right? And so inflation shot up then. But yeah, we will have a deflationary or at least a disinflationary event once the bull market's done. But, it's going to come with that recession whenever that potentially comes, if it hits.
And just to be clear, when we talk deflationary event, are we talking about the dollar strengthening or something else?
Yeah. So in a deflationary event, again, that's going to be the opposite of what's been going on. So you're going to get the way we want to think about this is the DXY, and the DXY is a weighted index that compares the USD euro, the USD yen, the USD pound, all these things, right, at different weights. And so what we're talking about is when we have a deflationary event, what you're going to see is that the DXY is going to rally, right? So the dollar is going to rally in value against these other currencies. But that doesn't mean that there's necessarily going to be a strong decline in the number of dollars out there, right? We're talking about just the value of the dollar versus the other currencies.
So in relation to what we just talked about with asset prices going up and how it can be inflation, but can also be a liquidity problem, I assume that principle holds for deflation as well.
Yeah.
Like
again,
are we going to have housing prices collapse? And that's not necessarily, deflation, but maybe some people will call it deflation. Like that's where it's like, okay, Chris, what is actually going on when I see some of that price action?
Yeah, exactly. So what you're going to get is, it's not always what happens, but what's the reasoning behind what happens, right? And I saw Grant show up here in the comments, and he understands this with real estate, right? When you come in there, you go, okay, well, there are reasons why people may not be buying houses, right? What are those reasons? Well, right now, what has it been? It's been that everybody and their grandfather, bought houses or redid their mortgage rate back there when we were like around 2 or 3%. So in order to have housing supply, you have to have people selling houses, but with mortgage rates up at 6%, why, even if they want to move, why would they, right? Why are you going to double your price? And of course, the housing, the value of the houses have increased since then. So you've got a higher price, you've got a higher mortgage rate. People are going to sit on their mortgage rate. So we look at it, we go, okay, well, housing prices were rising because what? Because they didn't have the supply out there, right? They didn't have it. So right, people sitting on supply. And then you go, okay, well, everybody thought, well, hey, the housing prices were going to crash because the interest rates went up so high. Well, no, because again, as we talked about, everybody, the majority of, if we look at single family homes, had their, a huge majority of them had those 2-3% interest rates. So they weren't in danger of defaulting, right? So again, it goes back to what we were talking about at the beginning there, and something else other people talk about with the recession, right? They say, okay, well, rate cuts are coming up, and the thing that goes around everywhere is, okay, well, because rates are being cut, that means a recession is going to follow. Well, no. What we have historically is a recession is already in progress, and then the Fed cuts rates, right? Like their rate cutting is in response to the recession. This time around, the rate cuts are a normalization of policy, right? They had the huge, the significant rate hikes that they had over and over and over again coming up that sent us up there to, hopefully fight inflation. And now that they're seeing that job's been working, so the reason why they're cutting rates is to normalize it, to bring it back down. It's not because, oh my God, we're in a recession and we have to do it to spur on more spending, create more credit, to entice people to do things. It's okay, well, we were sufficiently high for a while now. Things are cooling off. We feel like we can safely probably start cutting some rates. So your underlying reason for things happening is much more important than the fact that they actually happen. But historically, when all these things that everybody's talking about all throughout social media, whatever, have been for the same reasons, right? It's been because we're in a recession, and then these things, are a response to that. But again, right now, we haven't hit any actual definition of a recession at this time. So again, it's hard to be bearish, on markets when you're not that.
So wrap all this into, why does this matter for Bitcoin? If you're saying assets are going to go higher, is Bitcoin included in that? And that's what you're looking at when you're looking at some of the charts. And like yesterday, if you guys weren't on our Twitter spaces in the audience, you should have been. But we were talking about how, hey, we might be getting out of this sideways action, right? Like we're getting pretty close to being done with this. And so does what you're telling me with the Dow and the 6 to 12 month window as far as stocks go tie into also the Bitcoin story that you're seeing play out?
Yeah. Generally speaking, again, the different things we talked about, we've got the global liquidity continuing to increase. And so risk on assets, stocks, Bitcoin, stuff like that should benefit with price appreciation because, again, the fact that there's just more dollars chasing it, right? So that's good. The value of the dollar going down, making, again, everything else held equal, prices should generally be expected to rise as well with that. So, we've got multiple things happening here again around the same time that are all bullish for price. And there's no reason why Bitcoin shouldn't, continue up with that. Again, I know people are concerned because we hit that all-time high and then we've just been, it's basically been sideways. It's slightly lower highs and lower lows, but really it's for all intents and purposes been sideways for about 5 months. And the longer you go sideways, especially when everybody wants it to break out, the more time they have to think about, oh my God, I'm probably wrong and this is going to go the other way and I'm going to lose a lot of money. And people get scared out. So there's no reason, with all these things happening, that Bitcoin shouldn't continue to rally as well, with stocks and whatnot.
Is it in any way different? I mean, so one thing that I'm always, kind of in my own mind is, how tied is Bitcoin to the stock market, to what generally is happening? I have people who tell me, hey, if the Fed's going to print money and asset prices are going to go up, or hey, if we're going to have a market collapse, like now they'll say, I don't believe this, but it's still interesting to ponder. They'll say, hey, now's not a good time to buy Bitcoin. Wait for all assets to crash. Bitcoin will be included in that, and then you'll buy. As opposed to, well, Bitcoin might be the flight to safety. So if everything crashes, Bitcoin might actually do better because that is the flight to safety. So that's why I'm always like, how tied in is Bitcoin now to like the analysis that you're seeing? Like, is it any different? Because we'll see that in the comments on our Twitter spaces. We'll see it in our comments on here. People always kind of making that assumption. So it always makes me curious.
Yeah. When you're looking at it with that, everybody wants to try and time, right? Everybody wants to get a lower price. And we all want lower prices. But if there's one thing I learned in 30 years of doing this is don't screw yourself by always just looking for those lower prices, right? Because a lot of times it won't happen when you think, when you're looking for it to happen. Or when it does finally happen, a lot of times what happens is people get scared. And they're like, oh, I'm going to buy when it gets down there. And it gets down there. They're like, well, nah, it's going to go down further. And then it goes back up and they miss their chance anyway. So, again, I believe I said this last night on Spaces. If you're of the type who believes in Bitcoin and it's something that you want to do for a while, and you've got this belief in it over the longer term, the best thing you can do is to develop some sort of a DCA. And that doesn't just mean buying when price go down. We're talking about just dollar cost averaging is not like, oh, I'm just going to buy when it's going down or whatnot. It's this idea that you buy a certain amount at regular intervals consistently. And sometimes you're going to get it as it's going up and sometimes you'll get it as it's going down. But the idea is that you're collecting more and more of Bitcoin, which is what you're trying to do if you've got this belief in over time, right? Something Gary's been really adamant about pushing out there is the idea of stop worrying about price so much if you really believe in Bitcoin in the future and you've got a longer time frame, and just focus on getting as much of it as you can, because that's what the payoff is going to be.
And so not to press though, but maybe my basic question is, does Bitcoin follow the market from what you see, and you think it'll continue to do so?
Yeah. Again, no reason to believe that Bitcoin's going to do anything different. If we have some sort of crash, you expect everything to crash. Everything's going to crash. Bitcoin, gold, silver, everything's going to break down at first. But my expectation, something I've been saying for years now, is when we have something like that, we should expect, my expectation is that Bitcoin will hit the ground running first. Usually it's gold, but I believe Bitcoin will beat gold even in the move up coming out of that.
Does that mean it'll crash first?
It means you can probably look for a potential top signal prior to the other things, but it doesn't necessarily have to. But likely you're going to get into it. You're going to see that probably come down just prior to it, probably. That would be my best guess. Again, Bitcoin's only been around while we've been in this secular bull market, right? The only thing we've really had to look at was 2020 when we had COVID. and we had that drop there. So, if anybody wants to go back there and look at the chart, you'll see, okay, well, here's how Bitcoin and gold and stocks and everything did at that point, and look for that, that move back up. But you can definitely, if you go back to the GFC back there, 2008, running into 2009, again, what you'll see is, gold and everything coming down, but you'll notice that gold bottoms out first and starts pulling back, prior to stocks. So when you have a crash, everything takes a hit at first.
Got it. Guys, I know I've been sucking up a lot of air. Gary or our new surprise guest, if you have any comments, please feel free to chime in.
Henry, what's up, Henry? Welcome to the show. How you doing? You disagree with anything Chris said? We would love a really aggressive debate this morning. We haven't had enough drama in our life.
I wanted to find debate with Chris here. Sorry, I was just hanging upside down when you guys put me on. I was inverted. But I wanted to find debate with you, Chris. But honestly, I think you covered it in a general enough way that I think, look, I think for me, I think my gold price, I already thought gold had to pull back. So I already called that. It's like 2,000. I think I sent you the price, Gary, just to be 2,000, like $69 or something. So it has to probably hit that. I try to call things when it's not popular because I want to show people that you can call these markets. Like you really can. Like I didn't make up, like we were talking on your spaces this weekend. And I was like, just wait till Monday. Just wait till Monday. It looks like you're about the top. You might save $5,000, if you just wait. And I wasn't saying that I'm not even trading Bitcoin right now. I'm just telling you because I can see the chart. I could see there's a red dot forming, and that's going to mean that there's going to be a cooling off period. That's it. It's so simple. And so anyway, I think Chris summed it up really nice. I don't want to hog your airtime, but I did. I thought that was great. But obviously, look, Trump gets in office. Why do you want to own gold? Do you know is that crazy? That's my thinking. I don't know. Sam?
So
Chris?
are your buys going to be based off the election? And maybe that sounds silly because I know a lot of people would be, but are you telling me, I don't know what you own, right? But let's say you own gold now, Trump wins. Would you sell the gold and say, okay, time to go into other assets? If Kamala wins, or you're like, well, shit, time to buy even more gold and sell everything else? Like realistically, like what are your actions going to be on November 10th?
Well, everybody that knows me knows I'm full-blown XRP right now. Way, way too heavy in XRP. But I have an opinion on the rest of the market. And with gold, I just wondered why anybody would want to be in gold if Trump gets elected. And that's why I thought Gary could speak or Chris. No, I understand.
I actually think, I think it's very logical because I think Trump is a no-war president and gold is behaving as if Harris is going to get in. Now, I think Bitcoin will absolutely scream for other reasons because I think Trump is a pro-capitalist, non-interventionist. He'll let the market work. He'll see the opportunities. But I could absolutely see gold getting smashed in a Trump election. Maybe, it's at all-time highs here. Silver hit $32, and now it's back to 29. I still hold some silver, but when Henry says just what he says, like, guys, I got to tell you, if Trump isn't elected, I'm more worried about what the fuck I'm going to do with everything else I have. I'm not worried about Bitcoin. I'm worried about everything else. Like, wow, this world is going to get weird, dude. I think everyone's legal expenses will go up. For sure.
What do you mean by Trump, by gold is behaving like Kamala's getting elected? Like it's appreciating and that's a sign?
Gold. That's a war chart, dude. I like, there isn't anybody that can't explain to me. This is a war chart. It's hey, shit's getting ready to hit the fan and people need gold and silver. So yeah, and like this is why I like the Bitcoin bet so well, because Bitcoin under Trump is good. Bitcoin under Kamala, bad, right? They're going to just, I just got off the phone with a $2,000 an hour attorney. I'm like, hey man, how can these people just do this shit? File suits and actions, and it's like, it's just the way it is today. And like, that's a horrible answer, man. It's just the way it is. I literally asked him, I said, hey, how can people just keep, and it's like, it's expensive to roll over and it's expensive to fight it. And that just is, this country, when it begins operating like this, it needs to understand the only thing you're going to be good at is legal shit, but you're not going to build anything. Okay. Like literally you're not going to build anything. This is destroying innovation. Okay. You know what I'm going to do? I ain't building any more businesses. Fuck it. I'm just going to keep buying Bitcoin. Fuck you people. Okay. I won't help the marketplace. I won't reinvest in, I've had 3,000 people work for me, man. Like, why do you want to, like, you know, if there were red flags across my whole life, and awesome, dude, come after it. But when there's no red flags and they're still allowed with impunity, dude, if this can happen to me, it most certainly can happen to anyone. And somebody just took a pot shot at Trump, more than a pot shot, actually. We got a guy that's a billionaire that's not even an American citizen. He's in jail in France. Now, I think France is getting ready to get their little panties wiped out of their body because everyone's fighting this, going, hey, this is totally uncool. Like, I don't hear anybody supporting what France is doing. And the question is France doing it because they're a NATO ally, or are they doing it because they're really just doing it by themselves? Remember, there is no France anymore, though, okay? They belong to the EU. They have no sovereign responsibility anymore. France is no longer really a country. It's a subsidiary inside the EU. Hey, all you people in Europe and all you Frenchies, chew on that this morning, okay? Literally, you're no longer a country. You are, what's it called? There's a word for it, right? But you're basically, slaves to the EU. To four people in
vassal state,
four people in the
like
EU,
that.
and not one person here can name all four people. $10,000 if anybody can name all four people, none of which were elected, by the way, who are controlling the entire EU. If I'm France or Italy or Germany, I'm like, wow, I no longer have any control over anything, including how they get their energy. Because if we don't like the way they get the energy, we blow the pipes up. So, I mean, it's like when you go through this scenario, people can say Gary's being a little emotional, but it's like, this is about as critical as you get here. Okay. NATO's telling the EU what to do and what it cannot do and who it can buy from and who it can't buy from. The EU's then telling countries what to do and not to do. You have embargoes on Russians, yet the Germans are still buying natural gas from Russia. Well, I thought there was an embargo. I thought it was illegal to buy shit from Russia. You see, and that India is getting $30 discounts on its crude oil. The greatest benefactor of all this is India. Well done, guys. So yeah. I just like, bro, if you can't get bullish on Bitcoin, there is something wrong with the entire thought process. XRP, I don't know anything about, but Bitcoin, like, this is a once in a lifetime opportunity. I just don't see how the only way this goes bad is if we go nuclear.
Yeah, no, I can totally see that, Gary. I don't, my mic's on?
Yeah.
Oh, okay. I didn't know if we were all hearing each other. So I think you called it, man. Well, look, this is not the beginning of communism, but this is what communism does. We're going to chase out the capitalists. All the money is going to try to flee to, I don't know, the moon. I'd be begging, ask Elon Musk for a ride to, some satellite that he can build where you can float around the earth and maybe not be sanctioned at that point, but still have connectivity. I mean, Sam, and I know it sounds like I'm making this up, but I'm kind of serious at the same time. Like, everybody's going to run for the hills because the next step is your real estate's going to be taxed to death, right? So already my taxes are high on my real estate costs. My taxes are almost as high, and I'm not rich. I'm not Gary rich, right? Or Grant rich, but my taxes are almost as high as my about a little over half of what my property costs me per year, like my taxes. I mean, just think about it. If you own, like, what were you saying, like 16,000 units? What is the tax on that? I mean, that seems like I can't even fathom what that must be. But for me, that's at my property tax being where it's at. See, I don't care about the tax as much as I care about what I'm seeing with the tax money that's going up. If I was happy with what I was seeing, I wouldn't complain about the tax. And so this isn't me not wanting to pay my fair share. It's that I'm not seeing anything good with my money. And so it makes me, because I live a very simple life. Every time you see me, I'm in this shirt. I own like 7 of these shirts. They cost $7. You see, I'm very thrifty in my life, very thrifty. I ride a bicycle on purpose. You know, it's not an accident that I live the way I live. The only thing that looks extravagant is my home and maybe my computers. But my point is, by living this thrifty, I'm not interested in giving all the savings away. So anyway, based on that, my wife and I, we were looking desperately for a place to flee to, but we can't find it. So.
Yeah, I was hearing Peter Thiel go through the exercise the other day. Hey, where would you live? And he's like, the question is, what city, or is it a country? And for him, he's in California somewhere, you know, doesn't like it. Everybody's leaving, but you know, he loves the weather. There's all types of inflation, right? Like, you know, I'm not so worried about the tax on an apartment building because the consumer, the leaseor is going to pay for it. This is why I say home ownership is outrageously stupid. It makes no sense whatsoever. To Henry's point, you know, if his plumbing breaks right now, I'm pretty sure his wife's going to rip out the internet card and say, hey, go fix the damn plumbing, dude. Right now. So this marriage of love all of a sudden turned into his wife found a plumber. The problem is it's 2:00 in the afternoon or 1:00 in the afternoon, and his peak earning capacity is right now. And he's not a professional plumber. I'm pretty sure he's not going to get a multiple for being a great plumber. And this is, no one ever considers that. Like when an employee comes to me and says, hey man, I got to take off a couple hours, you know, I got to go fix my door. I'm like, dude, I have to fix my door too. Like,
yes.
Right. So why the fuck do you get to leave? I didn't ask you to buy a house. I did not ask you to buy a house. You can't even afford the house. Buying $1 million house when you make $100,000. Right. So, but people don't think about that as a cost. That is absolutely a cost. When you get married to your most beautiful bride in the whole world, you're 27, like, you guys should think about this. Do you really want to own a house? Because I'm pretty sure Saturday and Sundays, you're going to be on the roof, dude, cleaning leaves instead of in bed with your girl, you know, checking the plumbing out. I mean, there's only one plumbing I'm ever going to get good at. It ain't going to be outside in the heat, dude. Like, it's not where my max production is to stay in flow, if you will, with the analogy. But these are very I know we're all laughing, but like, everyone should ask themselves what they're worth an hour.
Yep.
Okay. Like, if you don't know, I remember my old partner in the plastic card business. Somebody said something about that business failing. That business has not failed. It's an awesome business. It's just been a pain in the ass fighting away the bad guys. But she quoted her services to a client once, and I quoted the same client, and the guy started laughing at me. He said, dude, your quote for her has 3 zeros in addition to her quote. I think it was 10 grand. I said, 10 grand an hour, dude. She was at like $800 or something stupid. I'm like, what are you doing, man? Like, and then we ended up violently hating each other in the business. But I'm like, I actually value you more than you value yourself. That's the problem with this relationship. Like, I don't do shit for $800. It's silly for me to do something I just can't afford it anymore. Yeah. That may sound weird to some people, but it's just the way I value my time. I think most people never even consider what their time's worth.
Agreed. Yep.
I don't know how we got to that, but maybe it's because Bitcoin allows me an appreciation scale with a really low amount of energy. Once I've done my study, my homework, I don't have to keep restudying the same thing. This is what drives me crazy about all these economists in Bitcoin that are so much smarter than I am. Why do they argue over this power law XYZ model? None of these models are right. Gary's model is just as good. There are 62 million millionaires. They're going to buy $2,500. There is 406,000 ultra wealthy people, and they're going to buy 250 grand. And there's 200 billionaires that are going to do something stupid. Okay, like something really smart, actually, which is, hey, I'm going to take $1 billion and buy Bitcoin. Okay, why wouldn't, there's 2,500 billionaires, dude. Like for them, a guy worth $3 billion deploys $1 billion into Bitcoin. If it all goes to zero, nothing happens for him.
Correct.
Okay, if I'm right, he's got 10 billion. So someone is going to absolutely do this. Okay, it's absolutely they'll do it, and then the sovereigns are going to pop in here. I don't even know how anybody can even think this isn't going to happen now. There's enough money already in the ETFs that other pension entities are going to become, that's going to become their barometer. Okay, why are ETFs so important? Because that means everybody can just trade the same thing and everybody's kind of equal and they get to do their 2 and 20. Chris, am I right?
Yeah.
Nobody's better than anybody else. Really, it's just one big pool. And that's the ETF.
And they don't have to, mess with the wallets and the transferring, the same thing that me doing this since 2017. I still take a deep breath, say a little prayer before I send, some kind of digital currency somewhere, because man, if you got it wrong somewhere, you're kind of screwed. Right. And so ETFs make it easy. And that's the thing I'd been talking about, at the beginning when I first came in. I said, everything right now is too difficult. Stop talking about, it makes people be their own bank. People don't want to be their own bank. Why did the Patriot Act get passed, 20 somewhat years ago? Because people were taught, hey, this is going to help us secure you. It's going to keep you secure. People don't want to be their own security, right? People don't want to do all this. They're great points to make. And, for people to really think about it, they're great reasons to do it. But most people don't want to do that. Most people don't. They want to get in there. They want it to be done. They don't have to think about it. And so ETFs coming in really just up the bar. It made it quick, simple, easy for people to get in there and get exposure to Bitcoin in some shape or form without having to learn all the technical stuff or deal with the potentially sending it to the wrong address or not doing the number right, or all those little silly things that we've been dealing with as people that are in, the industry that we deal with every day.
Well, and I would like to touch on that, Chris. The one thing that I point out with the paper products, and I don't want to debate if it's paper or not. I'm just going to call it paper Bitcoin, just for the sake of separation. But with paper Bitcoin, we were buying paper Bitcoin at $8,000 this cycle, guys. I want people to understand, if you're in the paper, it falls sometimes as much as depending on how you look at it, 100%, depending if you're going up or down, right? But so 8,000, we were at 16,000 roughly. We were buying $8,000 GBTC.
Yeah,
roughly. And I don't know if you can speak, but I only point that out is because when this is why I always suggest I know that Gary's smart, and I know Gary's smarter than I am, and I know Michael Saylor's smarter than but I know that I can also call the market pretty good. And so I'm like, damn, I can't tell people to hold at 74,000 if I don't think it's going to be there, or if I think it's going to 27, right? It's like, I try to hold my tongue, to be honest. It's because I'm not against Bitcoin ever. I'm pro what Bitcoin's about, but I just want people to have a clear reality of what they're buying with the paper products. So when we do top, when Bitcoin does top, and I know we'll all disagree on when and what, but when it does happen, it's people be careful in the paper products. You can lose more than the real thing. And so I just, I don't know if you could address that, Chris, if you could talk about that, but I don't hear people mentioning that part of it.
Yeah, again, it's just being aware of what you're actually getting involved in, right? And for me, I kind of teeter back and forth on this issue a little bit because to get where I've gotten in life, I've had to take responsibility, right? So when I made mistakes, and I've made, Lord knows, probably more than most along the way, right? I've had to accept that I really, I didn't understand what I was doing. I didn't understand what I was getting involved in. Whatever else is going on, I had to accept that to get in there. So part of me, at going to be 50 years old here in a couple of months, part of me goes, man, you know what? I grew up Gen X. I grew up in the 70s and 80s, and what do they say? We were the only people that were 30 at the age of 10, and we're still 30 today. There was a lot of, you were left to figure things out on your own. So you had to take a lot of responsibility along the way. And so part of me goes, listen, you guys are in a market, just because you can get in doesn't mean squat. If you don't know what you're doing, you're an adult. At least to be in the market, you're supposed to be an adult, right? That's most places have that law. But, so I kind of sit there and go, well, you need to get it figured out. You need to understand what you're putting your money into. You have to understand what you're doing. If you're investing and you're investing in stocks, you have to understand what you're doing by putting your money in the stock market and in the particular sector that you're putting it in, and what's going on, stuff like that. If you're putting it into Bitcoin, you have to understand what you're doing, because at the end of the day, the only person responsible for whether you lose or make money is you. You could say, oh, I listened to so-and-so and they were saying here and whatever. But at the end of the day, you're the one pulling the trigger, right? Or not pulling the trigger. There's responsibility there. The other side of me is that educational side of me where I'm like, okay, I realize that people don't take that responsibility, and let's get out there. But, I think it really does kind of fall down to that. You have to absolutely understand what you're putting your money into. If, you're a big boy, you're a big girl, this is money. You got to have respect for the money. This is something I talk about all the time, right? So we've become this society, especially here in the U.S., where it's all about quick money, right? It's all about gambling. It's Vegas or your reservation casinos. It's your state-sanctioned scratch-off tickets and Powerball and all this being shoved down your throat for a chance, right? A 1 in 100 million chance of making some money, right? And then people, they justify, they go, oh, well, it's just $50 or it's just $100 or it's just $1,000, whatever it is, right? But do you really have respect for your money, right? Because your money is actually a physical representation of the effort that you put out into the world. And as a human being, you can only put so much effort out there, right? So what's going on, Grant?
What's up, guys?
So when you look at that, you have to have respect for your money. You absolutely have to go, and you can't go, man, it's just $50 or whatever, because what could that $50 be to you if you really took it seriously? And I see too many people that get involved in markets and they have no clue what they're doing. And then they get upset because they're losing all this money that they didn't have respect for the money to begin with. And I think we've really got to start there, and just kind of work with where you go. Because as Thorough pointed out here, depending on what you're getting involved in, you're going to have a potentially a bigger drawdown than what you might expect. If you thought, okay, Bitcoin, but you're not actually trading Bitcoin, you're trading paper related, right? Derivative of. And the more derivatives you move out, as we saw in 2008 coming in with this, with what happened there, derivatives of derivatives of derivatives getting bundled up and, hiked out there and sold off. It gets pretty nasty.
Chris, I just wanted to make a quick comment. I really appreciated you saying, by the way, that not everyone wants to be their own bank, because I find it very often that people try to imbue their own ideology in a product and therefore assume that everyone is going to follow that imbued ideology in the product. It's not true. And I think that's what you're seeing right now in the Bitcoin world, but I think you can apply it to a lot of different things where people go, oh, I bought Bitcoin for this reason. Everyone else who buys Bitcoin then will be buying it for that exact reason. And then you see the backlash and disappointment, disarray in the culture of that product when people are like, wait a minute, you're buying. I still see people say, we should not be excited about Bitcoin ETFs, right?
Yeah.
Or any kind of ETF or any adoption by a government or whatnot. So like, don't you get the mission? And I go, well, do you understand what true adoption is and what that looks like in a market? Isn't this what you guys have been rooting for and wanting? So you said it very casually, but I think it is an understated point in the industry. So I really appreciate that, because I agree with you fully.
Yo, G-Dog, what's up? You're going to need to unmute your phone. There you are.
What's happening? What are y'all talking about today?
How you doing, son?
I've never done one of these. Is this on YouTube or on X?
It's StreamYard. So it goes to YouTube, X, LinkedIn, and then a few other platforms. So you can do it all at once.
We welcome you into our home, my son.
Well, good
it
to
is
be
so
here.
good to have the child that has gone away for decades to come home. You were welcome here, my son.
Well, thank you for letting me bringing me into your kitchen. What are you guys cooking up today?
Hamburgers.
We're trying to figure out how to get filthy rich like you, bro, and do it with something that's easier than apartment buildings.
Yeah, well,
and faster.
Yeah.
That's all.
That faster part. I don't know anything about faster.
What's up, buddy? What's happening? What brought you into this room?
I saw you guys on here, so I said, "Hey, how do I get in there?"
See, easy peasy.
Why don't I ever get an invite to this good stuff? I just finished doing an interview with Roger Stone.
Dude, we talked about doing something the other day on a number of things, and what are you talking about, dude? We invite you all the time.
Yeah, well, we're doing it right now. There you are.
Exactly.
It's happening. So what's going on y'all's world? Y'all talking about crypto today or $50 bills or what?
Well, we were discussing the Dow potentially hitting an all-time new high, asset appreciation in the next 6 to 12 months, and the causes behind that, whether that's and Chris, correct me if I got any of this wrong, and that could be due to just an increase in liquidity. We were touching a little bit on the election and what might happen to just general investment strategy after the election. Kind of talk about, right, would you sell all your gold if Trump got elected and put it somewhere else, or would you buy more gold if he loses and Kamala wins? Kind of using gold to track like a board chart. So kind of a little bit all over. I was asking Chris a lot of more technical questions, because when I hear asset appreciation, I'm like, okay, does that mean inflation? Is it because the dollar's getting weaker? Is it because there's more liquidity? Like, just how one term can have multiple causes behind it. And then talk a little bit about if there was going to be a deflationary event as well. So, Chris, if I missed anything, feel free to criticize, but I think that was a quick summary.
Yeah, I think you got it there, man. We touched a lot of things.
Yeah, so I don't know if you have any commentary on that. I mean,
yeah, so,
I know it's a lot, but
I mean, all these things are happening, right? Like I don't own any gold. I've never bought gold. I've never understood gold. But I'm a coward investor. Like everybody watching or listening, I just know my deal. I'm never looking for a score. I'm looking for protection of capital, protection against inflation and the printing of money, cash flow. I want to be paid to wait. And I want to be paid I wouldn't take an insurance premium out unless I got paid on the insurance premium. And so I don't have any insurance, but I literally don't have any life insurance. Like I have cash flow from my assets that will take care of emergencies and problems. So, and I've gone pretty much all in on that one decision. Doesn't mean I'm right, I wish I owned a lot more Bitcoin than I have. I have a little bit. I wish I had 10 times the amount I have, because I believe it will happen at some point. But it doesn't do some things for me that I love, which is I am addicted to cash flow, dude. Like particularly cash flow that doesn't get taxed or it's been deferred from taxes. So I hate the federal government. I'm glad that Donald Trump, people confuse Donald Trump with the Republican Party. Donald Trump destroyed the Republican Party. Like, there's not one Republican president that will support him. That is fucking awesome. That is like the best thing going. Kamala, dude, she is either financially illiterate or worse. There is worse. She believes her supporters are.
Yep.
She either believes her supporters are dumb, stupid, illiterate, or they're too lazy to actually do any research. Because there's nothing she's proposing that can actually be done. Or that you can't already get. A $25,000 house credit, you can get that today without the federal government being involved. Anywhere, any city, any town, today, there's 1.7 million homes for sale right now today that anybody can buy and get a $25,000 credit on. So you don't need the federal government to fund that. And she knows that. She's got to know that.
If she wins, oh, go ahead.
The biggest problem with housing today is it's just unaffordable. And there is no such thing as affordable housing.
Yeah.
The moment they talk about affordable housing, you know they're lying to you. Those two words do not go together. Like that's like saying some drugs are safe. No, all drugs have risk.
Yep.
And there is no affordable housing. When I was growing up, a house was $7,500, and people complain about the payments and the insurance and the mortgage and everything. Today, that same house today has gone up 65 times, 35 times since 1958. And if the average house today goes up 35 times more, which it will, by the way, because we have way more money today. The average price of a home 50 years from now will be $30 million in America. That's not beachfront shit. That's a regular house. Now, nobody can believe that when they hear that because nobody actually embraces the concept of inflation and money printing.
Yeah.
So last thing I'll say about that is this, I don't actually think that we're experiencing a lot of inflation for the amount of money that was printed. I don't really believe America is experiencing much inflation because if there was, I don't know, what is 11 or 12 trillion is what they're telling us, some number like that. Let's say it was 10 trillion. It was more than 10. Once that money gets dumped into banks, 10 trillion becomes $90 trillion. So because that money is going, as you guys know, is going to get lent out. A bank's not going to have it sit as a deposit. That's a liability for them. Okay. The bank's P&L is opposite of a person's or a business's. So cash is a liability and debt for them. When they give a loan out, that becomes their asset. So they have $10 trillion worth of liabilities, cash. They convert it to this weird concept that now I'm going to give a loan and that's an asset, which is bullshit. And now I have $90 trillion of assets on the street, loans, and they assume all these loans are going to be paid off.
Hey, Grant, can I ask you to touch on, because I was talking to a young guy, he's in his 30s, works on jets, F-18s for Canada, the government, smart guy. And we were talking the other day, and I was explaining to him how money gets created. And I was like, people don't understand how money gets created. If they hear you say it, they may actually believe it because it doesn't sound true when you just read the definition. Could you explain to them how the banks actually, how this gets it gets handed to the banks? The banks create money through lending.
Yeah. So like the first time I ever heard this, I was like, 33 years old, and a man said to me, "Grant, you don't need to make money." Because I kept saying, I got to make some money. I got to make some money. I got to make some money. He's like, Grant, the money's already made. It's been little things in my life that like shifted everything. Like it just shifted me to see the shot. If you're playing darts or shooting a rifle or a gun or bow and arrow, dude, you got to have this. It's got to be this little spot, right, where you hit it where it's perfect. And he slid me over. He slid my mind over from being a laborer to a people connector. To like, oh, shit, dude, I don't need to make money. I don't even need to come up with an idea. I don't need to build a product or service. Hey, how about this? I don't even need to exchange value. I literally just need to shift into a lane where there's money. And then, that could sound like a lottery ticket, but the problem with the lottery ticket, it's not scalable because you can't win it twice, right? So I read this book about money, all the different ways to make money. And basically this book suggested that the closer you get to money without having stuff in between, the faster and the more money you're going to make. I didn't know how to do that then, but today, my whole life now, 30 years, I've been chasing. How do I get closer to money without actually building products and services? So that's what banks do. Banks don't have a product, right? Banks, the money's printed by the Federal Reserve, right? Really, there's no print anymore.
Huh.
We're already on the blockchain. Everything's digital anyway. It's not like any old money's being thrown in some destruction cylinder today to get rid of all the old currency. And then I guess they print nickels and dimes and pennies still today. I know they do. Billions of dollars, even though nobody uses it. So they're going to put some more money in the system. 10 trillion was printed digitally. The 10 trillion then gets distributed out to people through PPP loans or tax refunds or promises. Gary got a check, Chris got a check, Sam got a check, Grant got a check. Well, I don't sit with the money. The money doesn't even actually come to me anymore. Like, it didn't even come to me. I didn't get to touch the money. They actually converted it to a bank account. They skipped me. I'm the owner, and they skipped the owner and put it into the VIA, which they already have a deal with. And the moment that money hit my bank, let's say I got $1 trillion. Let's say the six of us each got $1 trillion. The moment it hit our bank account, there was $6 trillion in it. But the bank said he doesn't need the money today, and they lent it out 9 times. So 6 trillion, 5 trillion became $54 trillion that fast. That means asset values would have had to go up 54x. Okay. Like housing went up maybe 25%. Rents went up 20%. Rents could have gone from $1,000 to $54,000 based on the amount of money that we printed. If everybody would have gotten an equal share. Now, not everybody got an equal share. And because too many people are working every day, as a pipe fitter.
Yeah.
And because we have a bunch of Kamala people out there that are financially illiterate. We basically have 345 million people in this country that are financially indoctrinated to the point of fucking slavery. Yeah. Like I was.
To your point, though, does that mean, or does that kind of imply, if the amount of money printed isn't matching what inflation should be, what's more important than the money printed is where the money printed goes? Is that the point?
Well, I don't know where some of this went. So, I mean, it went to Ukraine. So, I don't know where it's going. I just know that every time they print, anybody that's on the right hustle should get more money every time you print. Every time you print, you guys should have a fucking birthday party or a parade or, because like more printed money means you should get more. Now, if you're not getting more when the print is, it means you're in the wrong lane. You're sitting at the side of the road, dude, and you're sitting on this currency lane where all this money's being spit through the system and you didn't get any. So like every time they print, I divide that print amongst the number of people in that population. Like I do it almost every day. Okay. There's $17 trillion worth of equity in homes today. 17 trillion in home equity. And if you divide that by 80 million people, it's like $17,000 a person. But if that 17 trillion got unleashed into the US economy and was earning 5, 7, 9, 12, 15%, bro, you could literally solve every problem this country has with one thing: free up the home equity in America. so that the older aging people that have most of this equity, by the way, all this equity is going to be traded to some Gen Z deadbeat, lazy kid. He's going to sell the house. And you could have deflation there, by the way. We could move into massive amounts of deflation in housing. They all say, I'm sorry to be talking so much, but I get super excited about this particular topic. But they say that we have a home shortage in America. We really don't have a home shortage. We have a shortage of desirable homes in America that are in desirable locations. Everybody lives in about 12 cities. But you can go to fucking Flint, Michigan right now and find a house nobody wants. They hadn't wanted it for a long time. And
how does that relate to the deflation? Can you just walk me through that real quick?
Well, because let's say 75 million people, me and Gary's age. Thoro's too old, so let's say we have equity in our home, right? You got about 75 million of us that own most of the housing stock in America, and we're going to die.
Yeah.
And the moment I die, my kids now are, let's say it's 20 years from now. Over the next 20 years, all these people are going to be going to the grave. They're not going to live in that house anymore, and the kids don't want it. The two kids are both married now. One's a trans. One's a drug addict. One's running a business. They got their hands full. They don't want mom's house.
Right.
They're going to fight about it. Two of them are going to be like, let's keep it. One of them's going to be like, no, I need the money.
Mm.
At the end of the day, they're going to sell the house and nobody's going to care what the price is. They just want to chop up the 400 grand three ways. And they don't give a shit. And so that can deflate. That could deflate housing, single family home housing. The community housing, I think gets inflated, continues to get inflated because people want to live in community.
Mm-hmm.
And they want to be close to jobs and grocery stores and entertainment if they can.
Will private equity come and buy up the dead boomer's home?
Oh, sure they will do. They'll, as long as it's in a desirable location, but they're not going to Tulsa. Okay, Blackstone says we're going to Ukraine. We ain't going to Tulsa because they're going to rebuild Ukraine.
Yes,
they'll make trillions of dollars there. They'll rebuild an entire country.
Well, and the Germans, they considered Ukraine very valuable for a long time. It was going to be the place that the center. I won't say the name, but it had, the plan was that it was going to be the center for like grain production for. I'm not going to. I'm trying to avoid the party, but anyway, everybody that's old enough knows what the party was.
Somebody just said in here they're using their home equity to buy Bitcoin. I think that's actually a very, a fairly intelligent thing to do. You could do a reverse home equity mortgage. The money's going to cost you 7 or 8%. You don't even have to pay it back, by the way, if you're older than 63 years old.
Can you explain that?
The money you basically get advanced. Let's say average equity line. Let's say it's your house is worth 440. You get 200. It's going to cost you about 7 or 8%, probably 3 or 4 points going in. It's expensive money, right? But you just grabbed $200,000 that you do not have to pay back. You have to be 63 years old to do it. You guys have probably seen Tom Selleck on TV talking about it, but he never explained it well. And then you have basically you pull this 200 out, right? And you've collateralized the home equity to support the debt. So if you take this money out for the next 25 years, at least you were working it. See, this is the mythology of a home, right? That America got sold on, is why so many people want to own a home here, is they think that there's a way to make money. Not really. It's really a place where your equity dies and gets trapped. Because a home is really a depreciating. If you take 50 or 60 or 70 years, the average house is only going up like 1% a year. even though it looks like it's going up 65x. The house didn't go up, dude. The value of the money went down.
Yep.
The face value stayed the same, but the ability for it to purchase anything went down because we printed so much. So the problem with the house is you got to maintain it. And that fucking roof, every 20 or 30 years, you need a new roof. Every 10 years, the technology's dated. You go to Phoenix, come to Miami, man. The average house in Miami is almost $600,000. Those homes are 40 years old. 8-foot ceilings, 1,400 square feet, shit neighborhood.
And insurance keeps going up just ridiculous recently.
Insurance could be as much as your mortgage right now. Then you got HOA fees. Go to anywhere in California, 60% of the homes in California have HOA fees attached. Put less than 20% down, you got a PMI. That's another 2 points. PMI is 2 points. Maintenance is 1 point. Interest is 7 points. Property taxes is 1 point. You'd have to make about 14% a year on a house. You'd have to make, in 10 years, you'd have to sell the house for 140% more than you paid for it, a double plus 40% to break even on that house.
Grant, I got one more question for you because we're going to have to close out in probably the next 5 minutes. How does your investment strategy change if Kamala wins in November? Like, where do you move your money from where to where? Or do you just keep doing what you're doing? Because she might print money as well. Can you give me a short tidbit on that?
Dude, I just get, everybody becomes a renter. Thank God. God bless Kamala.
So that, I mean, is that...
She's a fucking idiot, bro. She's an idiot, okay? Anybody, if you're a woman in this country, you have to be sick to your stomach that this is who they ran as a woman. If you're a black or Indian and this is your representative, you should be sick to your stomach, okay? She can't communicate. She won't communicate. She's probably got an alcohol problem. She's operating like somebody with a drug or addiction problem because she's hiding. Just like Joe was hiding. Joe was hiding. We now know he was hiding a mental disorder, some mental deficiency, some cognitive problems. They hid him. They're hiding. They're not you can get intelligent, dude, but you can't hide some of these other problems. So there's a very good chance. We didn't see her for the first 3 days of the DNC, bro. That is a drug addict, alcoholic behavior. Disappearing for 3 and 4 days at a time in between events. It's socially a social addict. What's it called, Gary? Functional. They come and go. They do their job.
She wouldn't be qualified as functional though. Like I've known some functional junkies, but
yeah,
they
well, I mean, she did pretty good at the DNC, dude. Her speech was
no. She said that 220 million people got COVID. Like she's an idiot. Okay. She doesn't, there's nothing, like you just can't trust anything she says. It's ridiculous.
Yeah.
And I agree with you though. Like if I'm a woman in particular, I'm like, wow, we had 16 years. I've had 16 years as a feminist movement to get the right person to be, the symbol for femininity and power and independence. And this is what's good for a country. And men don't know what they're doing. We need some female energy. This is not possibly what you guys really wanted. I can't imagine Elena being excited about this being the representation of IQ, beauty, grace, class, intelligence. Just those 5 little things. Come on. She doesn't hit a C- on any of them.
No.
If we're being fair, right?
I agree, Gary. Like Hillary, to me, Hillary looked awesome. Articulate. I was like, oh, shit, man. They should have run Hillary.
Yes.
Because Hillary looks better than she ever looked. She was more succinct. She communicated well. And then Michelle crushed Barack. She was so much better. I thought Barack struggled in his speech. I thought Michelle was genius. If they'd have run Hillary or Michelle, I think Trump would have a hard time winning. I think they're going to have to hide her the whole time.
I think that's what they are doing as we're looking. She's not appeared in the media near as much as you thought she would, nor does she have any true policy proposals, right? I think that's their goal. Keep her out of the limelight as long as possible, because the more she's seen, the lower her polls will go. And I think we continue to see that.
But I think a lot of people are dissing, like the fact that Beyonce and Jay-Z didn't come and Jamie Foxx wasn't there. Like, you know how many people didn't show up? Okay. Like, did not walk in the room. That is saying something.
Grant, on that point, what Zuckerberg did yesterday in writing, I can't imagine how that conversation went with his lawyers, because he has opened up Pandora's box, dude. I mean, there'll be so many class action lawsuits in the next weeks. He had to think that through, right? But you're basically, I mean, Sam, I've been saying for some time, hey, these people will eat their own. It started last night, dude.
They always
started last night. Parasites like this, vampiric parasites, they only know how to do one thing. And what for the last 12, 15 years, they've been targeting us. Now that we're getting our shit together and we're not looking like idiots all the time, they have nowhere to go but look at, okay, who we're falling apart, so we're going to start blaming each other. This only increases now, right? This now goes to, guess what? Eric and the boys at Google are going to have to say something, right? They're going to have to say something. They're going to have to respond here. I don't know where this goes, dude.
I think Mark's waking up, Gary. I think Mark is waking up. You know, I think he's starting to be like, oh, now I know. I know he's been spending some time with the UFC. I know he spent time with Dana. I woke up in my life. I voted Democrat.
That's a fair comment. That's a fair comment, but I think he's got, to have done what they did over the last 4 or 5 years. I have a lot of payback to make before I'm Mr. Clean, dude. Like, at least you and I, we started paying back our felonies and our mistakes when we were in our 20s.
I don't have any felonies.
Yeah. Well,
I just want to make that clear. I have no felonies.
Our issues, right? Whatever that is. But to me, you don't just write a letter and get away with this shit.
Yeah.
Right. And add on to that, hey, we have a guy in France. Who would have thought, right? You just fly into France and you get stuck in a prison. His girlfriend's completely missing. Nobody has a clue where she is. It's a pretty weird time. But I think it's a very powerful message. A group of people are sending someone. I think it's the loudmouths like Elon, Grant, myself, and others. I think it's a powerful message, right? It's quite threatening. But I'm happy that it's coming to a head, because I think actually this is a point where we start to decide which side of that line, that little fuzzy line, are we on, right? And I think it's becoming clear, hey, there is a line. And if you cross it, you become bad. I mean, that's not new, right? It's thousands of years of biblical readings, man. When you cross the line, you've crossed the line. So, dude, those people, go ahead.
Can I ask you guys? So with you and Grant, because you fall into the jet setter category, right? A little bit. I don't know if you would call yourself that, but are you rethinking where you're going to travel now?
Oh, I would be very concerned of flying into the UK or France. Like, very concerned. I would be concerned about flying into Canada right now. Not that I've done anything, but they seem to be running draconian government entities, dude. Like, if they don't like you, they grab you.
That's significant, right? I mean, how is capital going to make it into those countries from there? If you're afraid to fly into those countries, you're not going to move capital to those countries. It's going to
you're not going to. I wouldn't invest in Europe right now. There's not a chance in hell that I can measure the risk in investing in in Germany or Italy. I mean, you want to go invest in Telegram, dude? Their currency lost 13% value in an hour. Right? So, and we need these platforms. If they dismantle these platforms one by one, country by country, we lose. That's why the response, we should just be really like very aggressive with our response and say, no, we want our platforms.
One thing that this does, though, it helps pull the more well-off people back towards the people, and it bonds us more, right?
Yeah. Well, to Grant's point, if Zuckerberg's waking up, I don't think Zuckerberg is waking up, but other people around him will go, oh, he did a naughty. I'm not going to do that. Mm-hmm. Look, guys, I've got to get ready for another meeting. I don't think I can. I see Chris going, hey, can I get out of this room? Chris, thanks so much, buddy. Really appreciate it. Henry, thank you. Grant, thank you for showing up. You're always welcome, buddy. Sam, you're an awesome co-host. You guys have one duty to do today. In the next 11 hours and 30 minutes, you need to do something nice for someone and take no credit for it whatsoever, okay? You guys have an awesome day. Do the life hack. It works. And buy a little Bitcoin. That would be my suggestion, but it's not financial advice. Thanks, guys.
Thanks, Gary.
Thanks, Gary.
Thanks, Gary.